Hello everyone, my name is Supaporn Ngerndee and my student ID is 1163645. Today I would like to talk about the financial statement of Blackmores. Blackmores is Australia's leading brand in health product segment, was established in 1932. The company is involved in the development, sale, and marketing of vitamins, minerals, herbal, and nutritional supplements that contain more than 250 of product items, with a market capitalization of $2.3 billion. There are 17 brands under Blackmores Limited, including Bioceuticals, Blackmores Institute, Paul's Blackmores, Blackmores Isoway, Oriental Botanicals, and Fusion Health. The company operation and market list in 17 countries across Australia, New Zealand, China, and other Asia. In 2016, Blackmores is the winner of Australia's Most Touched Brand Award for vitamin and supplement products by Reader Digest Survey for the 8th year in a row. A financial statement consists of three main components, including balance sheet, income statement, and cash flow statements. Financial statements support a wide range of stakeholders. For example, in the Blackmores. In the balance sheet, the information in equity section presents increasing in total equity, especially retained earnings, that the owner used to consider the return and loss of their investment to make decisions on investment or disinvestment. Moreover, the amount of current assets and current liabilities of Blackmores support the creditors or suppliers to identify the ability to pay its obligations. In the income statement, investors use amount of Blackmores revenues and its operation expense to evaluate the Blackmores profitability. Employees use the total of net profit to review the ability of Blackmores to pay salary and benefit. Moreover, Blackmores team management use the information in the revenue and expense section to measure their performance. The cash flow statements support the potential investor to determine a risk of investing in Blackmores and forecast dividends. In the same way, lenders review operation cash flows to decide to grant a loan to the company. The positive cash flow of the company helps investors to ensure that Blackmores has enough cash flow to pay a return on investment or a cash dividends each year. Let's focus on the 5 sections in the balance sheet and income statement of Blackmores. Assets. The first one is assets. The total assets of Blackmores increased 57% from $180 million to $295 million as a result of higher inventory values. The increasing of total current assets affect to an increasing in Blackmores working capital. Liability. Current liability have increased by $77 million to $192 million as a result of the increased inventory purchase and higher employee incentive and increased income tax obligation. Non-current liability have increased from $45 million to $61 million. This increase includes $23 million of debt funding required to acquire Global Therapeutics. Equity. The total equity increased by $48 million due to higher in retained earnings from $87 million to $135 million. The increasing in total equity improves Blackmores financial strength. Income. Blackmores revenues is largely from sale of goods. The group revenue has grown by 52% from $471 million to $717 million. The largest market based on Australia with 69% of total revenue. In addition, the potential customers are Asian customers, especially China, with almost 50% of group sales. The desirable revenue growth generates a higher profitability to Blackmores. Expense. There are two main expenses for the year, including purchasing raw material and employee benefits expense that impact on an increase of Blackmores total expense from $317 million to $454 million. A measurement of the asset. Blackmores employed fair value method to measure the company assets. This financial information is reliable and important for Blackmores based on accounting concepts that include relevance, the grant or loss of the assets impact to Blackmores performance. Confirmatory values. The value of assets needs to be measured to confirm or change existing expectation. Predictive value. The measurement of Blackmores assets used to help management team for their expectation about the future. Financial ratio analysis in Blackmores. First one, profitability. I employ two financial ratios to evaluate the ability of Blackmores to generate profit, including net profit margin and return on equity. Net profit margin measures how successful a company has been at the business of making a profit on each dollar sales. The net profit margin in Blackmores was 14%, would mean that for every $10 of revenue earned by Blackmores, $1.40 was the rest after deducting all costs of operation and production except interest expense that increased from 2015 of 10%. The return on equity ratio measures how much the shareholder earn from their investment in the company. The return on equity in the firm of 64% suggests that Blackmores is generating $6.40 of net income for every $10 in shareholder equity. Blackmores net profit and return on equity on a historical record 5-year show the improvement in Blackmore profitability. Blackmore profitability in comparison to industry average and peer company is tell investor that Blackmore has a higher ability to generate profit and to reward its owner than its competitor. This ratio is the important ratio that potential investors look at when deciding whether or not to invest in the company. Liquidity ratio measures a company's ability to pay debt obligation, and it is also a measure of how easy it will be for the company to raise enough cash to convert assets into cash. Blackmore operates with the current ratio of 1.5. It indicates that the company has enough current assets to cover short-term liability 1.5 times. The quick ratio was 0.9. That means Blackmore able to cover 90% of short-term debt by very liquid assets such as cash and account receivable. Blackmore current ratio and quick ratio on a historical record show the decrease in Blackmore liquidity. Higher current ratio and quick ratio are more favorable for company because it shows there are more quick assets than current liability. However, when compared to industry average and peer company, Blackmore liquidity is considered as acceptable liquidity ratio. This means that company with large amount of current assets will more easily be able to pay off current liability when they become due. So this firm is solvent. Efficiency ratio. Efficiency ratio measures the performance of a company short-term or current performance. In the other words, efficiency ratio measures a company's ability to use its assets to generate income. Inventory turnover. Blackmore inventory turnover was turnover 2.76 times. Namely, Blackmore inventory begin replenish once every 132 days. Blackmore inventory turnover constantly decline over the past 5 years. It indicates that the company is not managing its inventory properly. Blackmore should reconsider inventory management because a decreased number of time or an increased number of days mean Blackmore has to spend more resources in the inventory. The receivable turnover of Blackmore is 5.9 times. That is to say account receivable will be correct every 62 days. Receivable turnover was slightly increased on a historical record. It improved the ability of Blackmore to collect cash from customers sooner. Blackmore efficiency is lower than industry average and peer company. This showed the underperformance to turn inventory and receivable into cash. An efficiency ratio important because an improvement in the efficiency ratio usually translates to improved profitability. Financial strength, long-term debt to equity and total debt to equity of Blackmores is 0.3. This means that every $1 of stakeholder equity provided by the creditor 30 cents. The debt to equity ratio of Blackmores over the past 5 years was less than 1. That is considered satisfactory for the company financial structure. Moreover, Blackmores debt to equity ratio is in the average sector of 0.90 and it is hardly different to peer company of 0.29. A lower debt to equity ratio usually implies a more financially stable business. Blackmores is indicated as a low riskness for investor or lender. All about is a financial information and financial statement interpretation of Blackmores financial analysis. And thank you for today. Thank you. โอ้ยเฮีย
คุณปิดก่อน